Hey everyone, I thought I'd do another quick video just for today's closes, covering off the oddball timeframes separately, but just going into a little bit more detail on them because they're kind of things that people don't normally look at. Um, they function very similar to that of the more standardized timeframes, but um, different exchanges will have different anchoring dates for oddball timeframes. So, you might find that they um, dive a little deeper, or or they front run their targets, that kind of stuff. So they're things you can take trades on, but they're more useful for confluence because if you start to see a whole bunch of oddball timeframes that actually have confluence with levels that exist on timeframes breaking that are more like the daily, the weekly, the monthly, that kind of stuff, then you know that these are levels to be taken seriously, one way or the other. So this is a 37 day. I'm just picking this because we actually have a 37-day close today. And if we rewind all the way back to the beginning of chart here in August of 2021, we're up to our third candle. Let's see what happens. Yeah, we get some kind of range forming, and we hit the hold level there. So when we hit that hold level, kind of like a medium risk trade. It's come down into that level. Let's just see what this looks like on a lower time frame. Okay. So if we look at that, actually probably didn't even need to look at it on a lower time frame. Could have just hit the old fast forward button. But as you can see, it came down into that fib entry and then went up and hit the minimum expectation, rejected off the inverse, which was there, and that was one trade. So that was basically opening a swing position below 160 and then taking your TP there at 171. So based on a 37-day time frame. Now if we have a look at that, what comes next? Because ideally you want to get some kind of trend. You've got a hold level here, so you'd mark that for the future because it's going to create a trend or a rejection somewhere in the future, and get rid of our fib level because don't need that anymore. Let's see what we get. Okay. So this is looking like it's going to become a hold level left behind. We've got a break level here. It looks like we're going to break the break level. We don't have a trend yet, so nothing to bounce off for the break level. So see the closure just under the break level perfectly. That allows that break level then to reject, continue down. So we still don't have anything really for it to retest back up inside that range, but it could create something. So when it closes under the break level like that, you normally know that you're going to get a retest and then a dump, or a dump and then a later retest, but that one pretty much went there straight away. This is bear market days. Just clicking. Okay, so let's see if we can actually get ourselves a trend now. So that hard closes that break level. That is now a resistance level, and oh, what we want is for this thing to close yellow. Cool. So now we have a trend. That's our first downtrend. So typical trade would be that it might try to spike through that, reject either off the trend or off the break level, and then go down to further downside. But yeah, first touch of that trend. So if we head up in daily, see. Where was that created? That was created there. So And from the looks of it, it never even got there. So welcome to bear market. So that basically was our trend for quite a while until it started to try and creep over it down there. But let's just go fast forward. So it's still rejecting off the break level. Nothing else much in there to trade. You wouldn't have got a short if you were waiting for these levels because it doesn't look like it got there. Okay. And so now you got another hold level. So you'd mark that for the future because if price returned to this, then it would reject off that, and that would be some kind of short for the future. So we've got a 2 candle range in here now. So we can actually start marking our break levels as well. So this is a hold level. This is a break level. Hold. And we've got a break. Yep. So let's see. Where are we on the lower time frame? We're there. So it looks like this is where we might actually get our first retest of trend. So this is an area where you could actually open a short, even if you wanted to. This is why it's a good idea to look at it on the lower time frame, because if you actually look at it over here, that candle opened there. It was actually opening below the trend. Then that's sort of when it first hit the trend, and that was about $43. And then it started to go down from there. So unless it hard closes over this trend, it can't come back and hit that hold. Like it needs a hard close. So chances are it's just going to keep going down. So with this one here, you're going to have a hold level in there at $36 if it keeps going down. So if it tests this, you've got another short. So this is your break level now. This is your hold level. So if it closes in accumulation, it'll retest the hold level or the break level. And if it hits this too soon, then it can just reject off that and keep going down. But this main trend that's here is not broken yet. But this is the sort of thing you're looking for when you're looking for bottoms getting created. You know, your ranges are getting smaller, they're not so extreme. You're waiting to get hold levels and break levels tested. But as it stands, this is still not the bottom yet. It hasn't reversed. Okay, so that was your rejection. So that was your short. When you're down at $36, there isn't really too much of a target for this short because realistically you're getting pretty close to zero. But as you can see, the huge volume, started to come in. And when you start to get really, really big volume like that, that's also a bottoming sign. So your rejection there. And you still haven't broken this trend. But because you've tested the hold level, the next accumulation candle is going to be able to go to the break level if it can. So this is the first test of a hold level. This one was never tested. This one was never tested. These break levels were never hit at these higher levels. So this is Sol continuing to bleed down into the bear market. our trend is still the same. So let's wait. Okay. If this closes in accumulation over that candle and engulfs in the opposite direction, it is the first break of this trend. Let's see. Okay. That breaks your trend. Now, not only would you make sure you close your short at this point, you could be risky and just wait to close your short as a retest of this hold down here. But this is now showing that price is looking to reverse. So you would make sure that your shorts were closed. So mark this as a hold level for a long. This is most likely going to become break level down here. And we've closed our short and our trend has moved to there. And we're on the correct side of trend to bounce off the hold level and look to reverse. Okay, that one doesn't break the trend. That one does. That breaks the trend. So now the trend has moved to there. And typically you're going to get 5 or 6 trend changes. So if that's 1, 2, 3, so we're up to 3. Sometimes you'll get interior ones as well. Like you could argue that you're up to 4 because you've got this slight interior here, but say 1, 2, 3 for now. And we've got a hold level and a break level down here. They're not a 37-day time frame because it's just a single candle here. They're a lower time frame. But that's sort of what you'd expect to see when you start to see the bottom forming, because it doesn't start by the 37-day reversing. It starts by something smaller reversing and growing into a bigger time frame. So for now, we would wait and see if we can get a long off this hold level, or we would just open a swing long and we would target the hold level up here, because it's going to happen. Like we've already actually, in fact, we just target $48 because we've already hit the hold level. So now we just wait. Ideally, we're trying to get a lower entry. Being greedy, we know that we're sort of 3 to 4 stages in. We might get a chance at getting a lower entry, or we just open the swing position and look to target these levels, because this is pretty much looking like it's bottoming. Go. It's our entry. Okay. So now we've got a 2 candle range on the 37-day. So we're developing something equal time frame to our downtrend. We got our long entry. Our target's up here at $48 because our hold level's already been hit. Trend is staying the same. We are potentially going to create another hold level, maybe. Yes, do we? See, yes, we do. Okay, so we've now got. So you can sort of see how this reverses. Your hold level and your break levels are moving up. They're not being hit anymore on the bottom. They are being hit on the top, because this range here never really had a hold level, because there was no engulfment the other way. It does have a break level, which is this, and that break level is already hit. It created a hold level. So you could actually add to your position here and still be targeting this higher level if you wanted to. Only thing you have to be a little bit careful of is that the movement of your trend is there, and that candle sort of opened on it. So this is now 4 or 5, depending on whether you consider the interior. Now move. Let's see where that goes. What are we doing? Hit and play. Okay. Yeah. So creates another hold level, forming another range, going after the break level. after the break level gets broken, it'll go after the hold and then the break, and then the rest is history. That's basically just how price moves. There you go, broken. See you later. So this is an example of a break level that never got a retest. This one down here, and if it ever does go to 0, it does get a retest. See what happens next. So that break level rejected back down, created. So we've now got a pretty decent sort of uptrend that's formed there. There's our uptrend. So as long as we hold this trend, then and it should hold until it sort of hits a hold level, and then the idea of a hold level is to attempt to actually break that trend. So see how that plays. And it started to create some new structure like range trends through there, like so, and it's got new hold levels here, and so you can keep marking this stuff out as time goes on, but that's going to become a break level. That's going to become a hold level. So you end up with little lines on your chart. So that's your hold level. So you got back up inside this range, this 2 candle range here. You had this range trend form, which represents the top of this lower range, all of this area down here. That candle hits your hold level, rejects back down to test the bottom of the range again and the range trend. So that was your first good hit. And the reason that was going to be such a big rejection is just it's so far extended from any kind of support. You had this, which was going to reject, and realistically you only had that, or that could have been support. So the old thing about fast up, fast down, as soon as it runs into something, it has a bit of a hiccup. If it was moving too fast, well, you get what you get. So that's at hold level. With this candle closing blue, it doesn't actually create a range trend on this time frame. It would need to close yellow into yellow. But then that's where you find that there's a lot of other time frames in play as well. So when you're looking through time frames, you're just looking for the ones that have the cleanest structure and are making the right things effectively. One of the reasons, say down here, this. So you've got this trend here. Where was it? Sorry, it's here. You've also got that trend there, which starts a really long time ago. But you'd mark that out because somewhere in the future that is going to be some kind of relevant trend. So, and that's a range trend that was created right at the very bottom on this time frame. So you can see these range trends, which they're on very obscure timeframes that you wouldn't consider to look at normally, but look how many times you could have taken a long off that. 1, 2, 3. So okay, so then this uptrend is now in a position of being able to be broken, and if it does get broken, then realistically you're going to have to come back down to one of these hold levels or to this range trend or to this range trend to actually be able to recover that and continue up. So let's see what happens. Bounce off the range trend again, but it's broken the uptrend. So at this point, this trend moves to there because it was a full body close underneath it, and it's creating a hold level. So it's going to try to keep pushing up. I haven't actually been doing this, but this is now gone to here, there. So it's in a position where it hasn't broken the downtrend yet. It has moved this trend, still got this bottom range trend, still got a hold level. There's still plenty of places this can recover from, but it hasn't broken out yet. Go. So that hard closes over the range trend and smacks into the break level. It fails to actually close above the break level. Main trend shifts to there, and so that trend, the next time it gets hit, is going to be pretty solid resistance. And so far we don't have any new array of our uptrend, but we do now. So now we have an array trend that's starting to get extended to the upside. So if we lose this trend, we target this trend. We lose this trend, we target something down here. So there's your rejection. And this looks like it might be the candle that loses the trends. Yep. Not only does it lose them, but it goes all the way back to the range trend. But it hasn't hit the hold level yet. So this has lost this top trend, hasn't lost this trend. So it's the next candle that closes blue that loses the greater uptrend, and that's when it's going to want to retest these lower levels. That would be that one, all the way down. So it actually went all the way down, came back up, which means it never lost this uptrend in that move. And nothing's really moved apart from this trend is gone. And so now it's just a waiting game. See when this trend here moves. Okay. So that is now a broken trend, but it's got a nice long wick on the bottom of it. So it can move to there. And if this trend gets dived, touched, or hit at some point in the future, then it can create a bounce and it can target whatever the hold level is. So the hold level is this little skinny doji in there. So let's see. It's in there. And that one's gone. So let's see what happens. Yep, straight through it. That's where we are now. So we've moved a trend. We've hit a hold level. Unfortunately, that typically means that we go back to trend. So we might be saved if we can close here, which is looking like we're actually going to. So it looks like we're going to close above 172.120 today. So if we do close above 172, just need to find our interior trend, which is there, not broken. Shouldn't really run it off the top of that. In fact, actually, it's there, it broke, it went to the hold level. There now. Yeah, so a close at this level creates a hold. A hold should target a trend, which realistically is all the way up there. And so overall, that's looking pretty bullish. How far it dives down into the hold level, because as you can see with hold levels, if I should give you an example of, say, this one, it didn't just stop at 197 and then go down. It went up to 210. This one here, it went very high. So like when you look at this, it went all the way up into 126 and came back down. So this one never actually managed to get to its target because it created that trend. So because hold levels reject a trend, in this case, it spent so much time in the hold level that it actually made a new trend and then it hit that trend and went up. So that's an example of how a hold level or a fib trade can fail. If it spends too much time up in there, it can end up building something that actually causes it to have support. So look at this one on the bottom here. So this was around 102 and it came down to 95. And then you get some like this, which just, see here, it just taps at 156, comes down to maybe 154, and then off it goes. So question then becomes, what's that one going to do? So it offers basically a path to 200 from 172 or below, and that's the big thing is where do we come down into this? So if we start to get a downtrend today, but we know we've got this hold level here, then you could start to do a swing position between here and the trend, but it is quite a sizable gap between there and the trend. Alternatively, what you could do is start to look at it from a lower time frame and just see how is it sitting on the daily, because we still have daily uptrend at this stage. You'd have to find out exactly where the daily trend is, but it's going to be either going to be that at the end of the day, or it's going to be from here. Pretty similar. It's going to be one of those two. You'd have to look back to see where it actually is. So then if we reject off the daily and we're looking for some kind of daily support, then something in here, which is pretty close to the entry, you'd have a range trend, which is there. So now going back to that range trend might mean we actually just go back to 172 and then we bounce all the way up to 200. And this is the thing, sometimes you think you're bouncing off a daily trend, but what you're actually bouncing off is a 37-day hold level. And you tend to find that these things all happen in the same moment. So sometimes you just go, wow, that was a huge daily move, but it wasn't a daily move at all. It was something way bigger, and it just happens that the day that it hits it, as you can see tomorrow, would have absolute perfect confluence between the hold level on the 37-day, which closes today, and the position of the daily range trend. So you could come down to there, and then you could simply bounce up to there. So if this starts to come down, there will be a trend in play on a lower time frame again. So you'd be dialing it down. So let's see what a 4 hour is. Be looking to see what kind of time frames you have. So this might close up for the day, but with a wick, give some kind of like if it does close up with a wick, then you might have a 4 hour sort of thing like that. Then it could bounce through the 4 hour, come up, hit one of these. There's a lower time frame break level on that. It could hit something up in here, and then that could start the downtrend, and then it would start with a a 1 minute and then a 5 minute, then and so on and so forth. So, and you just keep following it down until you saw the signs of reversal, all the same signs of reversal that happened down here when Sol was $12 or whatever it was, $8, and you're just looking for that same thing, but to happen in reverse here on a low time frame, and knowing that you want to head to something like this, and then when you go to there, you're looking again on the really low time frame to see if you actually have a reversal coming in the other direction. So you end up with all the lines on your screen. Hopefully that gives you a bit of insight into how price moves around on charts, hold levels, break levels, flip trades, trends, and if you still think it's all about people buying and selling after this, yeah, I guess they're all just following the chart, right? Or who knows? But yeah, enjoy. Cheers. Bye.